for this short call to be violated. But as you know, if they come out with big numbers, it can surely do that.
Yep, let's break this one down. The complex custom four-legged spread, using two separate strategies to create one position on this one. As Kevin mentioned, February 21st, monthly cycle that expires in just 2 days. Sell the 108 strike call, buy the 113 strike call, short $5 wide, neutral to bearish call vertical that you collect a credit on, and offsetting some of the costs on the 1 week wide put calendar on the 98 strike, buy the February 28th weekly 98 put, sell that same 98 strike put in the February 21st week monthly cycle, 1 week wide. 55-cent credit is what we got up there on the risk profile. That's what you can make if this stock falls below 90 bucks. Because you're taking a credit in, you've got no risk to the downside. Now, where's your break even? 108.55 to the upside. That would be a new fresh all-time high by over $3. So Kevin took that one standard deviation move that the option market's pricing in, which is between $5–5.50 either way to set this trade up. If it does fall that one standard deviation, that's where you see the apex of profitability at or near that $98 a share level on this one. Neutral to slightly bearish type of position, because you profit in 3 out of 4 scenarios, right? Stock falls out of bed and goes lower. You get to keep that 55-cent credit. You get that little kicker right at or near the 98 strike where you can be profitable. And then even if the stock goes higher but remains below that 108.55 break even, you're going to be profitable on this type of trade. I do have some assignment risk on that short 98 strike put that expires in a couple days also, so keep that in mind. All right, let's take a quick break. When we come back, we're going to take a look at AppLovin. The app technology stock's up over 700% over the last 12 months, near all-time highs after last week's blowout earnings. Stick around, we're coming right back.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. We're looking at AppLovin, maybe an overlooked stock. For that, let's bring in George Tillis, Senior Markets Contributor, here to help us break this one down. George, I'm sure you've covered this on the network before, but I don't think Kevin and I have traded this one. Up over 700% over the last 12 months. It's had a spectacular run. The last couple of earnings, it just jumped pretty significantly, including last week's. What do you got for us in here? Because I think it's overlooked because we talk about the trade desk all the time. It's not a direct competitor, but you know what? I don't think a lot of investors know exactly what this company does.
Yeah, that's a good question. In fact, I was going to mention the trade desk, which is just getting wrecked after their earnings. And I think there's a tie-in to the trade desk, which is essentially an advertised technology company, but their focus is primarily on transmission of media content, if you will. They also provide auction services for buy-side and sell-side advertising on platforms like YouTube, for instance. AppLovin also, I think, is moving into that space, but AppLovin still has its core business, which is it helps monetize advertising campaigns. They're obviously using artificial intelligence, but their focus really is on, the ecosystem of apps, whether it's, Apple iOS apps or Android apps, but at the same time, their core includes not just the app ecosystem for monetization of ads, but games. And that's where essentially they've been generating a lot of their sales and revenue growth. But at the same time, they're starting to encroach on the media space, primarily on places that traditionally Roku and the Trade Desk actually have a lot of market share. So their total addressable market just continues to increase. Their sales are just tremendous. I mean, if you look at the sales last quarter when they reported earnings, 44% increase in top line sales. EPS was over 200% growth at $1.77 versus 49 cents for the same quarter last year. And even though these numbers on a percent change basis continue to move higher, they continue to also demonstrate increasing earnings estimates. And if you just look at 2026 estimates, this just goes back 2 quarters where you see that first jump in the stock price late October. You're seeing another gap to the upside post earnings when they report on the 12th. But if you go back and look, the estimates for earnings for 2026 were about $5.90, and then they just keep moving it higher and higher, and now it's over $9.34. So even though the stock price continues to move higher, the earnings multiple is expanding, but also earnings are continuing to move higher. And that's where I think the analysts continue to move their targets higher. For instance, Citigroup increased their target to $600 now, and they actually had a $460 target prior to that, just because of the growth potential for AppLovin across multiple ecosystems, whether it's mobile apps, games, digital e-commerce is another place they're starting to move into. But I also think, just a traditional, linear, over-the-top television, which again, Roku and Trade Desk have a lot of market share, but also YouTube ads. That's where I think there's been some challenges for the Trade Desk, and I think AppLovin has really shined in that context.
Yeah, George, when the first thing when I started reading about this, and Tom's right, we don't cover this. I think this is the first time that that I remember covering this. It sounds pretty similar to what the Trade Desk does, which got beat up after earnings, but they do kind of an auction system. It sounds like they set up buyers and advertisers and suppliers of advertising in kind of an auction system. But the numbers, the growth numbers, revenue up 438%, net income, 43%, net income up 343%. So, it doesn't have a lot of float. It's had, again, video game numbers in terms of rally percentages, George. Is there any pause we should take from the Trade Desk numbers and their stock movement into this name, or is this just the new competitor on the scene?
Yeah, actually, I thought about that, Kevin. I think, if you look at companies like Google and the Trade Desk, sometimes they can be leading indicators, primarily Google, because it's the largest advertising company in the world. You can look at it in that context. It hasn't performed all that well. So maybe there's some sort of market indication from companies like Google. I think the Trade Desk is facing challenges, not maybe from ad spending slowdown, but really from competitive effects. And that's where I think you're seeing this divergence with AppLovin moving higher, Trade Desk moving to the downside. But even though the stock continues to just gap and continue higher, even though they also are raising their estimates for earnings, it's still getting a little expensive, long in the tooth, if you will. Like, for instance, this year's earnings were actually moved down slightly because they actually passed through some earnings estimates into next year, 2026.